Andreas, starting off with the fact that Korea did so well containing the first, even the second waves of the virus. Now virus cases are surging again. The vaccine rollout has stumbled. The IMF just upgraded the GDP 2021 forecast to 3.6% from 3.1%. Is it possible that if this vaccine situation doesn't get under control quickly, that very healthy GDP forecast is in jeopardy?
Well, certainly the vaccine rollout is a critical component of our forecast. The authorities' plan is to inoculate about 70% of the population by the third quarter. If that plan would suffer delays, of course, that could affect the case count, and it could affect confidence, and therefore we could see a continued sluggish domestic demand. So that is certainly a downside factor. On the other hand, though, I would say that the authorities do have policy space to respond if this was the case. So we have also other factors that balance the risks.
Do you mean policy room in terms of cutting rates further? And what would it take to see that?
Yeah, on the monetary policy side, I think the space is more limited. There could be some, but mostly on the fiscal side, we see space. The authorities already announced and approved a supplementary budget of 0.8% of GDP. And if the recovery really would slump, or if we would continue to see this unbalanced recovery that we have currently with exports very strong, but domestic demand running behind, there could be a case to do more on the fiscal side as well.
The IMF has urged just about all nations not to raise rates while the pandemic is still a problem. The Bank of Korea is meeting, they're wrapping their meeting up in a couple of hours. What's really expected is nothing, but if there was anything, it would be a rate hike. What do you expect the Bank of Korea to say today, and when should they start thinking about raising rates?
Well, we don't speculate about central bank action, but I think our view on monetary policy is that the current outlook, a fairly large output gap, we estimate somewhere between 2.5% and 3%. Inflation well below the central bank targets, also expectations. And then this remaining uncertainty about the recovery, I think all of that calls for continued accommodation. So this is our recommendation in the case of Korea.
What about growing financial risks, especially in the overheated housing market? Apartment prices in Seoul have doubled in the past 5 years. The population is getting angry about this. Does the IMF, do you see perhaps the need for some kind of modest removal of stimulus, don't even call it restraint, to send a message to markets to help bring these home prices under control?
Well, we think that the primary instrument to address really these financial stability concerns are prudential policies, especially macroprudential policies. Korea has a fairly sophisticated and broad toolkit that it has employed. These tools have helped slow the price growth in the housing market and credit growth. I think the authorities have to stand ready to do more if necessary. And in addition to that, I think what is important is also to look more structurally at the imbalances in the housing market. There is strong demand, and therefore action on the supply side is also needed to complement any of these prudential steps. The authorities already have done some things. They have announced several measures, especially to increase the public housing component. We think there are also steps to be taken and that can stimulate more a private sector response, including in terms of easing some of the regulatory restrictions on developments, and also some of the pricing restrictions that exist in the pre-sale market for apartments.
So, President Moon Jae-in's his Democratic Party suffered its worst defeat in the past 5 years. Again, the population is impatient. They feel some of these steps that have been taken have failed. You are in favor of more fiscal spending if needed in a very budget-conscious country. People don't like to see their deficit getting bigger. Is there a risk that President Moon Jae-in's popularity and support recedes in the event that they need that support to move ahead with more budget steps, with more spending?
Well, I think it's neither our own or our expertise to judge how policies affect popularity. But certainly what we would say is that Korea has had the advantage of coming into this crisis with very sound fundamentals, with very prudent level of debt. And they have rightly used that fiscal space against a fairly large shock. And this explains in part why the country has done relatively well compared to others in terms of growth. That space still exists, and clearly it should be used if necessary. There is a case of how to be used, of course. And here, I think our view is that the main issue in Korea currently is the unbalanced growth, where we have especially a service sector lagging behind, and therefore a targeted support toward households and toward the sectors that have been most affected is probably the best instrument to use.
The U.S.-China tech war becoming an issue for the world, certainly for exporting nations in Asia like Korea, which looks increasingly caught in the middle between its two biggest trading partners. What's the biggest risk now for Korea? Where is this heading?
Yeah, certainly Korea is a big trading nation, and therefore it depends on a stable and rules-based trade environment. And to the extent that there are tensions about a trade between two of the largest trading partners of Korea, that is, of course, a risk for the country. I think so far we have not seen any impact, and in fact, we've seen a very strong growth of the export sector across most categories. But certainly, any intensification of tensions would not be positive news.
One more thing I want to ask you about, and that's the IMF warning about steps by the Federal Reserve to remove stimulus could send shockwaves across emerging markets and developing nations. Now, Korea is clearly not an emerging market. So is this warning something that it doesn't have to worry about, that they can, the nation, the economy can withstand the inevitable moves the Fed will make? Maybe not for a while, but they're certainly in the making.
Yeah, I think we all hope, of course, for a smooth exit of policies when this is appropriate. And Korea is highly integrated, so it cannot fully, remove itself from the impact of changes in risk sentiment in global markets. But I think what we've seen in recent years is that capital flows have started to move a bit differently. And Korea is less affected in terms of volatility in cases in global risk-off episodes, partly because now we have many Korean investors who have positive positions abroad, and therefore we have some countervailing safe haven flows if this happens. Plus, as I said before, Korea has quite a bit of policy space as well, and therefore I think these factors provide quite a bit of comfort, and that Korea should be able to manage any volatility reasonably well.